Yeah, very good afternoon to everyone in India and still good morning in Germany. Still half an hour to go. I thank you all for your continuous support towards the series of webinars which the Indo-German Chamber has been doing almost one every week now. Particularly today's session is very, very relevant and important on the topic of enabling collaborative development, Indo-German Deals in a Decade, organized by the IGCC along with our partners Nexdigm and Ebner Stolz. Friends, we have a really power-packed session today with very eminent speakers from organizations Germany Trade and Invest, in short GTAI, of course Nexdigm, Ebner Stolz, who together made this wonderful report. We are very happy to have with us ZF India Private Limited, a German company which has been really in the news in the last months in India because of their growth and expansion plans. And of course, Tata Consultancy Services, the company we are all very proud of. So I really request all participants to stay with us till the end of the session because then we will also be taking up some questions. Friends, I think, at least from my perspective here in Bangalore, it would be fair to say that business is certainly coming really back on track. I mean, also when you look at the figures of the Indo-German trade, I think Seema will go further deep into the figures, but traditionally the Indo-German trade has been around 20 to 21 billion euros. And I was looking at the figures for January to June, and we are already at about 11 billion euros, growing at about 25%. So I think we are clearly at the pre-pandemic levels on that front. But also on the ground, when we speak to the business community, I think the sentiment is really getting better and better with each passing day. We here in Bangalore actually saw our first ever big exhibition, 70,000 square meters, sold out space, lakhs of visitors, and surprisingly, not a single hotel room available in Bangalore. So I think also from that front, we really see that businesses and people in general really want to get back. Of course, I think we have to still wait for a few weeks to see how the third wave, whether or not we have it, and if at all, let's keep our fingers crossed that it is not a very strong one. Friends, today's topic is on mergers and acquisitions. It's a very popular route of entry and expansion for the Indo-German companies. And just to inform you that, Germany already ranks third as the biggest European acquirer in India. And also the Indian companies are really looking for a foothold in the European market. And certainly Germany is the place to go for these Indian companies. Also, the trends in the past decade are a reflection of the strength of both the economies, which largely sort of complementary ecosystems. Yeah, without that too many words, I think we have really a lot of good speakers with us today. So I would like to now shortly introduce the only lady in our panel today, but I think it's really good to have Seema. And so Seema, I'll give you a brief background about her. She's the director of Germany Trade and Invest. She's an Indo-German professional with over 2 decades of experience in strategic advisory. Before joining the GTI in July 2020, she headed the India desk of a major German law firm for close to 14 years, and consulting basically the companies from the DACH region, the German-speaking region of Germany, Austria, and Switzerland, into their market entry into India. Seema has studied law in India and Germany and also holds a master's degree in political science. And in her current position as director, she is responsible for Indian investors and is there to answer all your queries on starting your business in Germany from the point of market data or legal or tax framework. So she is the person to go to. And I'm sure, Seema, since you have been in Mumbai, I think your inbox is flooded. That's what I heard. And she's also heading the German-Indian Roundtable, a member of the Internationalization Committee of Berlin Chambers of Commerce, a founding member of the Indo-German Association of Legal Cooperation, and she is also the ambassador for GINSEP, the German Indian Startup Exchange Program. So I would really warmly welcome Seema, and please take it over from here, and wish you all the best. Thank you.
Thank you so much for your kind introduction. So once again, good morning, Germany, and good afternoon from my side as well. And a very warm welcome to all of you in this session. So a short introduction about Germany Trade and Invest, which is GTI. So GTI is the Economic Development Agency of the Federal Republic of Germany. We have more than 50 offices in Germany and abroad. And thanks to this vast network of foreign offices, we have a network of international partners. We promote Germany as a business location worldwide. For foreign companies, we offer assistance setting up a shop in Germany. And for the German companies, we provide information on how to access opportunities in foreign markets. In India, as already Sumit mentioned, we have offices in Delhi and in Mumbai. So together with the German Foreign Ministry, Indo-German Chambers of Commerce, we at GTAI represent the so-called three-pillar structure of bilateral economic relations, working towards strengthening trade and investment relations. So in today's topic, we are going to talk a little bit about the Indo-German relations. And since we have our experts in this round, you are going to hear quite a few figures. So I'm going to limit myself to a few figures, how this relationship has been going on. So India and Germany's economic relations date back as far as 16th century, which is not well known, but it's almost 500 years. And in this special year 2021, we have three special anniversaries in the Indo-German relations. So first of all, we are celebrating the 70 years of diplomatic relations between India and Germany. India was one of the first countries to establish the diplomatic ties with Germany immediately after the Second World War. And second anniversary we are celebrating today is about the strategic partnership between both the countries, which started in 2001. And the third one is the 10th anniversary, which is the launch of the intergovernmental consultations. It is at the level of the head of governments. And these consultations, they allow comprehensive review of cooperation and identify new areas of engagement. So Germany has such a dialogue mechanism only with the few countries, and India has selected few of these countries. Now coming to the Indo-German relations, we see they continue to grow from strength to strength. As I already mentioned, India is one of the oldest economic partners in Asia, not only historically in trade, but also in terms of foreign direct investment. In the past 20 years, especially after opening of the Indian economy, Germany invested approximately 12 billion US dollars in India, making Germany the 7th largest foreign direct investor. At the same time, we are also seeing a steady increase of Indian foreign direct investment in Germany. As per my data available, which came in 2021, though there is a slight decrease because of Corona we saw, but we have almost 550 Indian companies in total operating in Germany, thereby creating 30,000 jobs in Germany, which is a lesser known fact. So Germany is the top favored place of investment destination in Europe, only after the UK. So here we see that not only the outbound investments happening now from Germany to India, we have investments coming towards Germany as well, and there's a steady increase there. One more information I would like to share today is, which I read there was a spike, not just in the business field, but parallel we see there was a spike of number of Indian students studying and enrolled in Germany of almost 20%. So we had a record number of Indian students enrolled in German universities in 2019 and 20, which is like almost 25,000 Indian students were registered. And this is the highest number only after China. So there is, you also see again a trend going towards investing in Germany, and we have this potential where you see there is a coordination and cooperation happening, and not only at the level, at the economic level, but also at the level of the students enhancing the cultural exchanges. And that's an important development which is taking place. So I am not going to mention other figures here because we have our experts here who are going to speak and elaborate on these issues. I'll take a stop and would hand over to Sumit. And I wish you all a lovely panel discussion and interaction today. Thank you very much.
Thank you very much, Seema. I think those were really important information from your side, and particularly the investment from Indian companies into Germany. I think somehow, for some reason, when we are also discussing, probably not many people are aware that Indian companies are also creating close to 35,000 jobs in the German market. So thank you very much for your remarks, Seema. And of course, we look forward to your moderation during the panel discussion. I would now like to inform you all about the study which has been prepared by Nexdigm and Ebner Stolz on Indo-German deals in a decade. And friends, this publication covers investment trends and the M&A landscape in the Indo-German corridor over the last 10 years, so as to identify the core synergies that have framed collaborative growth between the two countries. The teams at Nexdigm and Ebner Stolz have been hard at work behind the scenes to provide crucial insights into the key rationales and focus industries that have driven deal making between India and Germany. The report also highlights regional hotspots for cross-border business activities and diverse case studies, while providing insights into key factors that are likely to impact investment in the coming years. I'm sure all of you present today will gain a better understanding of the strengths and the business ecosystems of both countries while reading the publication. Of course, a copy of the entire publication will be sent to you, will be emailed to all the participants who are attending the webinar today. I would like to especially thank Tanvir Shirolkar and Dr. Christoph Eppinger, who have joined us today and will be discussing the publication in detail. And with that, let me say a few words about Christoph. I hope I can take your first name, Christoph. And he's a highly experienced transaction advisory, business valuation, and financial due diligence leader who has executed over 100 transactions, most of them cross-border, through his career of 17 years. His wide range of professional experience also includes audit of financial statements, consulting on international and local accounting standards, accounting-related support for public listed companies, for example, impairment testing, purchase price allocation, lease accounting, and clean team services special investigations. With a stellar academic background, Christoph is German public accountant and a doctor in economics from the University of Hohenheim in Stuttgart. Our second speaker for today is Tanvir Shirolkar. He manages the transaction advisory practice and is responsible for its growth and operational excellence for Nexdigm. And with over 14 years of experience across financial due diligence, business valuations, mergers and acquisitions, and joint venture advisory and transaction structuring. He is adept at handling every aspect of a transaction. Tanvir's strategic focus and a blend of analytical and commercial inputs have helped him deliver value-add solutions for many, many clients. With that, we are very happy to give the floor to our partners. I think, Christoph, please take it from here. Thanks a lot.
Yes, Amit, thank you very much for your warm introduction, and I would like to take over now. I would like to give you some insights together with Tanvir for our study we produced. And if you go to the next slide, as Seema already mentioned, we have to celebrate 70 years of diplomatic relations and 20 years of strategic partnership. And although we haven't been able to travel over the last 1.5 years, and I had to skip my last visit in India for last year, I was very happy to work together with my colleagues in India on that study, and we were able to keep that partnership alive on that micro level, at least. Yeah. And now we would like to go into more details. You may go to the next slide. As Seema already mentioned, may you go further, please? As Seema already, or Samit, you all, no, just one back, please. Yeah, at least a short snapshot for that slide. Yeah, as Samit already mentioned, we have about 20 billion bilateral trade per year here, and Germany is India's prime trading partner in Europe. But we also see for the foreign direct investment from India to Germany a huge number of 7.5 billion over the past, and over the last 20 years in the direction from Germany to India above $12 billion investment. Yeah. And also looking on the number of companies or enterprises active in India from Germany, 1,800, and Seema already mentioned a number. So we counted above 200 Indian companies active in Germany, also a huge number, and many Indo-German joint ventures operations in India. Yeah, so we see many routes together between these countries, and now we want to go more into the details for the M&A activities. If you go further, please. Now you can go to the next slide. Yeah. So for our study, we counted over the last 10 years the M&A transactions, and we came to 171. Of course, some are undisclosed, but that's a reliable number. And with a deal volume for $4.5 billion US. And if you go and split the 170 deals to the target destination, you can see 93 of the targets have been located in India and 78 in Germany. And as a key region in India, it's Maharashtra, and in Germany, the state is called North Rhine-Westphalia, actually the state with the highest population in Germany. And as the top sector in India, it's materials, and for Germany, maybe it's not so surprising, automobiles and components. But we will go into the details further on the next slides. But worthwhile to mention below that we can see for transactions in India that main transactions are with a minority interest, and buyers from India and Germany take the majority, above 50%, so or complete buyouts. It depends, or maybe it's a factor that buyers in India want to rely further on the existing management and see a need to run the operations with the current owner also in the future. and Indian buyers in Germany don't see that need or have another intention for the targets there. If you go further, please. If we split these 171 transactions into the different sectors, what we have done on that slide, you can count 31 for the software and services business. That's the leading sector of transactions. And then you can see materials, capital goods, almost on the same level of transactions, and then automobiles and components. But if you divide it by target location, you can see for software and service again, that's almost equal between India and Germany divided. And yeah, less surprising maybe for automobiles and components, the majority of the targets is located in Germany, 18 precisely, and 8 in India. So that's a remarkable number here. And you also can go further on the next slide, please. Now I would like to go a bit more into specific rationales behind transactions and demonstrate that for two specific buyers and their recent transactions. We would like to start with the drivers behind the transactions. If you go to the next slide, please. Well, here you can see again the split for the different sectors. From the left coming automobile, components, then software and service, pharmaceuticals, biotech, capital goods and materials. And it's the highest number of transactions in automobile and the lowest number of transactions by target location in Germany for materials. And the drivers behind these transactions we noticed for our study are for automobile and components business, for product and technological advancement, and of course, as one of the major markets for automotive, it's a gateway for the European market. Software and services, the driver behind are market penetration, market-specific capabilities, but also talent acquisition and technology, gain of technology and know-how. In the pharmaceuticals and biotech and life science area, it's R&D capabilities and portfolio enhancement which drives the deals. Capital goods, it's customer acquisition, technological advancements again, and materials acquisitions in that area are driven by market penetration, manufacturing capabilities. Yeah. So to summarize, the main driver behind are the access to market and customers, the capabilities in R&D and technology and manufacturing capabilities. On the next slide, we can go more on a regional level. So here you can see how the deals are located for the different states in Germany. And you can see that the highest number of deals or deal volume is linked with the strength of the states. And yeah, you can see states like North Rhine-Westphalia with 11 deals over the last 10 years. The highest number, and as I already mentioned, the state with the highest population, and also from an economical perspective, a very strong state. You see a state like Hessen with 9 transactions. You see Bavaria and also Baden-Württemberg and Hamburg in the north. Worthwhile to mention again with Baden-Württemberg, actually the state I'm living in, Stuttgart, with automobile and components as the maximum deal area, but also Hessen, also a strong backbone of automobile suppliers, and then software and services, or as we have seen, with a high number of transactions. If you go to the next slide, please. Here we want to show you two strategies of acquirers or cases. HIL, the first one on the left-hand side, it's a subsidiary of CK Birla Group, a much bigger company in the materials area. And they acquired a company, it's called Parador Holdings, which is producing here in Germany and in Austria materials for floors, walls and ceilings with very high quality and design standard. Yeah, and the strategy behind for HIL is to build up global production capabilities here in Central Europe and to enhance the product offering to customers. On the right-hand side, you see the famous supplier Minda, and they did two transactions in the also automotive area. However, these targets, Delvis and ISIS, RTS, are supplier coming with more design and engineering competences, software capabilities for cockpit systems in the vehicle, and also for electrics and lighting technology. So the strategy behind, again, is to strengthen their product offering with technological advancements for the OEMs and to go into more sophisticated product areas here. And yeah, these examples we want to show you. And as that had happened in the past, we also want to give you a short look into the future from the German perspective. On the next slide, please. Yeah, some key trends we notice for the current year and we expect for the future. First of all, most of the transactions at the moment are domestic or outbound by German companies for the first half of 21. We see a strong bounce back of GDP growth, yeah, from a negative number last year to approximately 4% in the current year, and with a positive outlook for the next one. We see a drop in savings ratio as there's coming more confidence to the people again, and they recover, and the consumer spending is recovering. We see coming back the service and manufacturing sectors in particular, but also in other areas, a positive trend from the development. And from more macroeconomic view, there is an expectation for a decrease in the exchange rate of the euro that would make investments from foreign investors more attractive here in Germany. So that's in a nutshell from the outlook. And Tanvir, you would like to take over for the Indian perspective, please. Tanvir, you have to unmute.
Yeah, thanks, Christoph. Can you hear me?
Yeah, perfect.
Yeah. Can you go to next slide, Sana? Yeah, so I would be talking about the acquisitions made by German companies in India in last decade. And let's understand what are the deal rationales, and I will also take you through some key growth drivers which are driving these acquisitions in India. Next slide. Automobile. So we all know Germany's expertise in auto innovation and manufacturing, and India's export capabilities and untapped potential for vehicle penetration. In fact, India is expected to be the world's third largest automotive market in terms of volume by 2026, and also owing to the growing household income, there would be a lot of M&As expected in this segment. We also know that India is becoming a hotspot for offshoring of automotive designs and engineering services, and a favored sourcing destinations for auto companies across globe. We feel in the coming years, the focus of on electric mobility will drive investments and deals in auto segment. The second is information technology. India is one of the fastest sector and fastest growing IT markets in the world. India's core competencies and strengths in information technology have attracted significant investments from major countries. In fact, India is one of the most preferred destinations when it comes to setting up of global capability centers. 50% of all GCCs are located in India. And there are almost 450 million plus internet users, and which is the second largest in the world, and this is going to grow more and more. So we also see growth in startup ecosystems, and because of evolution of IT industry, and now this is also bringing up the digital skills, where we see exponential deals happening in this sector. There are more than 417 approved SEZs across country. In pharma and healthcare sector, India is rightly being hailed as a pharmacy to the world. We all know India's role in manufacturing affordable medicines. It's largest provider of generic medicines globally, occupying almost 20% share in by volume. The manufacturing base provides pharmaceutical companies an edge in terms of cost and quality in India. India houses the largest number of USA FDA compliant pharmaceutical plants outside the USA. The government is also aiming to increase healthcare spending through schemes like Ayushman Bharat. We know German companies like Brown, who have acquired few Indian companies to leverage the manufacturing capabilities and to access the Indian pharmaceutical ecosystems. Capital goods, a large sector which contributes to around 12% of manufacturing output in India, and with 100% FDI allowed, the major international players like Siemens have entered the Indian sector in capital goods. Key deals and growth drivers are, industrial growth and capability expansion in manufacturing sector. There is a massive power capacity expansion in future. There is efforts by government to close the import-export gap. So all this is leading the acquisitions, M&A acquisitions in capital goods. Similarly, for materials, there is a rise in infrastructure development and automotive productions. Accelerated growth we are seeing in material handling and packaging segments due to investments in food processing, personal care, and pharmaceutical. There is a production-linked incentive schemes announced by the government to encourage productions and exports. So the takeaway from this slide in terms of the rationales which have, or key rationales for M&A deals is large untapped captive consumption market in India, skilled workforce at lower wages, manufacturing base for exports, local know-how, and talent acquisitions. Next slide. So this slide talks about the German companies' acquisitions in Indian state-wise, and it also shows the leading sector where deals have happened. So more than 50% deals have happened in Maharashtra and Karnataka, and followed by Tamil Nadu and in the southern part, and Delhi, NCR, and Haryana in the northern part. We see the major auto clusters also around these locations, like Chakan in Maharashtra, Oragadam in Tamil Nadu, and NCR and Sadanand in Gujarat. Maharashtra traditionally has attracted a lot of M&A transactions for German companies, driven by large talent pool, large consumer base, progressive industrial policy and incentives, good infrastructure and connectivity, and largest exporting state of India. Many other states also are offering similar physical and other policy incentives to industry and businesses. Yeah, so next slide, please. So case study, we have covered Brentex acquisitions of Raj Petro, right? basically which helps the Brentech to step into the Indian chemical distribution market, which is the 7th largest globally in India, across the world. And we have also covered ZF's acquisitions of WABCO at a global level, which will help in expanding its commercial vehicle service portfolio. In interest of time, I am just covering very few aspects of these deals. We can go to the next slide, please. Sorry, I can't see the slide. Hello?
Just one moment.
Yeah, 2021 and beyond. So on this slide, I would talk about overall economic environment in India going forward. So RBI has forecasted a real GDP growth of around 9.5% for financial year 22. As the domestic activity is picking up, the data also shows growth in GST collections, power consumptions, rail freight, highway toll collections, and air passenger traffic. So production is a key sector. Production in key sectors like chemicals, steels, and motor vehicles is almost back to pre-crisis levels. The infrastructure investments is also likely to generate additional demand in machinery engineering, mechanical, and steel sector. In addition to incentives like Make in India and Atmanirbhar Bharat, production-linked incentive schemes have been formulated to create large scale manufacturing capacities and increasing exports and generating employment. So we also see increasing attention being paid to environmental, social, and governance related matters. We have come across elevated levels of global commodity prices, and hence inflation in the country is also rising, and we need to monitor this carefully. Otherwise, this could dampen the growth in the economic activity. And there will be also rising NPS in the books of banks, which we have to carefully monitor. Next slide. So I would be talking about recent trends which are driving the deals, basically the themes. Sana, next slide. So the key deals which are driving are, themes which are driving are consolidations or debt reduction, portfolio enhancements, and diversification. Several companies were, compelled to restructure and diverse their stressed and non-core assets to deleverage their balance sheets. Post-COVID, companies are working towards making their supply chain and production system more resilient, and manufacturers of essential goods expect value chains to be more regional, and so that they can, reduce the time to go to the market. Travel restrictions and social distancing norms have created a need for using advanced digital technologies in serving people. So there are very good opportunities for integration and absorbing, smaller companies for larger big business houses. On the right hand side, we see some of the areas where we see a lot of upcoming deals. Healthcare technology. Healthcare technology, particularly in India, needs upgradation right from infrastructure level to delivery to process management. We see large utilization of AI, robotics, and application of virtual healthcare is becoming more evident in healthcare sector. Automotive, because of use of hybrid or moving to electric vehicle, we feel there is a large opportunities in electric vehicle segments. Information technology, I think the trend is last 1.5 years, we have seen a lot of deals in education, health, or e-retail, and this interest is going to increase further and further as the time passes. Renewable energy, India is ranked 4th most consecutive attractive, renewable energy market in the world. And Germany, we all know, is the leader in renewable energy within Europe. And given the huge strides made by Germany in this sector, and India's own requirement to fulfill the energy requirements, we feel that the sector is ripe for collaborations between the two sides. Another area where Germany and India could work is energy storage and grid integration. Educational technology and vocational technology also, we see a lot of deals happening. In fact, Siemens has opened a training center for electricians and fitters. We know Bosch has opened centers in India. Online retail is, I think, the longer the crisis, the greater the likelihood that online and omni-channel purchase will become next normal. In electronics is one segment, because India is highly dependent on China when it comes to import of electrical components or batteries. So I think there is a lot of opportunities for domestic manufacturing. So the key takeaways from this slide is we see lots of automation in manufacturing and supply chain, and we see application of technologies in serving the people, and these are going to increase more from here. Yeah, next slide. Synergistic. Sana, next slide, please. Yeah, so just to conclude on the synergistic ecosystems, India and Germany can take advantage of the complementary emerging from their strong and diverse economies. India is one of the most rising economies of the world, and because of this untapped potential, a large consumer market, rising disposable income, skilled workforce at a lower wages, and quality input for export market, both the countries can see how to collaborate and work on some emerging technologies. Right, we all know for many Indian businesses, Germany has been a source of high quality, reliable machinery and equipment provider. And we know Germans progress in manufacturing and engineering. So there is a large area where both these countries can collaborate and work together. Germany is also a high volume of international exposure, well integrated with economies in Europe and North America and Asia. So sourcing from India, investing in India, and inviting Indian firms to act as intermediary suppliers along various value chains that could sharpen the competitive edge offered by each of these countries in international market. So I would like to conclude and ask Christoph to just throw some light from Germany's perspective.
Yeah, thank you, Tanvir. Yeah, maybe let me start this way. The size of the maps you can see on the left and the right-hand side are a bit misleading. So Germany indeed is much, much smaller than India, but I think it's in fact an attractive market for foreign investors for various reasons, and some of them are here on that slide highlighted. I would like to mention. The first of all is the strong R&D capabilities and innovation-friendly ecosystem. And by the way, based on a current law, more subsidies are offered by the state for R&D costs to cover them. Yeah. Another point is the strong Mittelstand ecosystem. Mittelstand, what does it mean? We call it the size of companies between, let's say, 30 to 500 million euro. You can find these companies all across the country, maybe with the focus on the states I have shown on the slides earlier. But it's a strong backbone of the economy of Germany and not only dependent on a few blue chip companies. We have a developed economy with a lucrative sales potential, both for private and professional customers. Foreign investors are getting access to organized market of industrial customers, and not only to the customers, but also leading technologies and know-how. And finally, it's a gateway to the European market, which even became more important after the Brexit. And to come back to the first slide, maybe it's not only a partnership between Germany and India, but also a relationship and partnership between India and Europe nowadays. Sima, would you like to take over at that point?
Thank you, Christoph. Thank you, Tanvir. So thank you very much for presenting your study. And we are looking forward to going through this, and thank you very much. So in this session, we are joined today our new panelists. I hope we can, I would request the other panelists to switch on your camera, please, so that we can see you. So I cannot see Mr. Neeraj Sanghvi from Tata Consultancy. Can you hear us? Would you like to join in? So I hope there's some technical hitch here. So I hope he joins in, but I will shortly introduce him. Mr. Neeraj Sanghvi is working for Tata Consultancy Services. He is head of finance, UK and Europe. Neeraj has over 17 years of M&A and investing experience, and he has played a crucial role in building the organization's presence across the globe. He closed over 11 major cross-border transactions, both buying and selling side, and at least one each continent. During his career, Neeraj has worked with a multitude of global investment banks, private equity, venture capital firms, as well as legal and accounting firms. I cannot hear or see Neeraj. Technical team, is Mr. Sanghvi able to join in?
Just give us a minute, let me check.
All right, so we'll just continue it. We are running a little bit short of time. So our next panelist here, whom we can see, is Mr. Suresh KV. He is the president and head of region of India for ZF, which is part of the Germany headquartered ZF Friedrichshafen AG, operating in 27 countries. A warm welcome, Mr. Suresh KV. So ZF caters to automotive and industrial market in India through wholly owned subsidiaries and joint ventures. As Suresh KV is responsible for the governance and overall growth of business in line with the strategy of the ZF headquarters. He's an engineer graduate with a post-graduation in management, and his professional career, Suresh has worked with a few major national and international companies like Asian Paints Limited, Bajaj Auto, Vistan India, and Philips, among others. So KV, as he is called, joined the company ZF in 2015. So we spoke before, Mr. Suresh. I am free to call you KV as you are fondly called. Welcome to our panel. So I would like to directly go to the first question. Suresh KV now. So my question to you is, with seven entities and 18 manufacturing locations, ZF has impressively scaled its operations in India over the past many years, both through organic and inorganic route. So in addition to taking direct acquisitions and joint ventures, the company also benefited from indirect acquisitions, such as those of Fabco and TRW. So here, can you share your insights on how M&A facilitated the growth of ZF in India? And the related question is how your company leveraged at the group level acquisitions for India expansion and thereby contributing to ZF's global strategy. Over to you, Mr. K. Thank you. Please unmute yourself.
Thank you, Seema. Thank you for this question, and IGCC also. I'd like to thank for having given me this opportunity to speak on this forum. So let me start with saying that ZF values the Indian market, and we believe that the fundamentals of the Indian market are strong. They are going through some ups and downs due to various factors which are known to all of us. However, we still believe that the Indian market will grow, and it is the fastest growing market for a considerable amount of time. So given that, we were always looking at how do we play a significant role in the Indian market. And as we are all aware, Indian market has its own specialities. It's a value-based market. The customer looks for any Indian rupee spent, what is the value which we get in return. So, and also we are also, the engineering and the technological requirements in the Indian market are a little bit different from what you see in the Western countries. So it always calls for what I call it as adopt and adapt strategy, wherein you need to adopt all the right products and technologies for the Indian market, and then we will have to tweak it and adapt it for the Indian customer to make it affordable. As one of the customers always puts it, the Indian consumer looks for technology at an affordable cost, and that's exactly what we are trying to do. Now, this needs different approaches. As always, as the old saying goes, different strokes for different folks. We will have to look at how do we ensure that we are able to meet the different customer requirements with different approaches. Some of them have been through joint ventures, as you rightly said, therein we match or we try to look at partnering with like-minded organizations wherein the German technology collides, or rather combines itself with the Indian style of manufacturing and the Indian processes of manufacturing, which is a blend of West and the East, and help us to make sure that the right products gets to the customers at their right in line with their expectations. The second important aspect is we have looked at acquisitions, because as you can see that ZF used to be an organization which was seen as a transmission organization way back, and then it grew into an auto components organization. Now we are looking at being a system supplier. So if you look at TRW, we added quite some parts which we were, or rather into our product portfolio to ensure that we become a full-fledged supplier for the automotive industry. Now that left us a small gap in the commercial vehicle area, and that's exactly why we looked at WAPCO, acquiring WAPCO, so that we are able to provide value-added systems and services to the customer, so that we can become a one-stop shop as far as both the light vehicles and the commercial vehicles are concerned. And as you rightly said, we are not left behind on the industrial side also. We did see about quite some acquisitions and mergers on the renewable energy area, and we are having a huge operation in Coimbatore, where we manufacture turbine gearboxes for wind turbines, and there also we have complemented it. We have added the off-highway axle manufacturing as well there, so that we are able to add to our portfolio and contribute to the Indian market with industrial products as well. So what we always do is we look at organic growth and then we also look at like-minded organizations for acquisitions, and last but not the least, we look at partnering with the right groups, so that we are able to make meaningful contributions to the supply chain and the value chain here, so that the customers are able to get the best out of ZF, though it's always seen as a high-tech player in Germany. So in a nutshell, I would say that how do an organization like ZF play itself in the Indian market to make itself significantly present? It's through all these methodologies, and that's how our approach has been.
Yes, thank you, KB, for throwing light on these issues and your very interesting strategies which are there. And I think quite a few participants might be taking some interesting takeaways from what your strategy has been taking up to. So I understand Mr. Neeraj Sanghvi is not here, but maybe I'm audible to him, so I'll anyways try again. I'll just put a question to him. And technicians, please see in the meantime you're trying. Let's see how we can cover up here. So the question which I wanted to ask Neeraj and asking now is, I hope he gets a reply. So my question to Neeraj is, TCS is known for being one of the largest and fastest growing IT companies and service providers in Germany, and has taken a step towards further growth with your recent acquisition of the captive unit of Deutsche Bank. So the question is, what market opportunities, emerging trends are likely to drive M&A activity of Indian IT companies which are aiming for growth on international platforms in the coming years? So, and the other point which is interconnected is how would the software companies in German ecosystem fit into these inorganic growth strategies of Indian IT companies? So I'm not sure. I don't see or hear anything. I don't know. Technical team, do you have any access? Yeah. Well, I hear that.
Seema, he's actually speaking, but I guess we can't hear him. So I think there is some audio issue.
Okay, I think. Okay, so.
Yeah, because he's trying to reconnect.
All right. Okay. Okay, so I think he is writing. He's written writing the answer. So I'm just waiting a second, and let's. So your answer. Well, that's fast. He is saying the. So I'm going to read out the answer. Okay, so he has already shared his answer with us. That was quite fast in a nutshell, so I'll read it for you. It says the entire digital spectrum and rush for digital and cloud capabilities are expected to drive deals as Indian IT companies scale globally. And there is a rush for acquiring platforms, processes, and people to compete at scale with international IT service companies. Germany's engineering capabilities and prowess in manufacturing processes are expected to drive deals as Indian companies look at tapping the opportunities in Internet of Things and digitization of manufacturing processes. Thank you so much, Neeraj, for being so tech savvy and sending your answer that fast. Thank you. I hope the participants could relate a little bit to this kind of question and answer session. Anyway, so without ado, Christoph, I will address the next question to you. So you have a vast experience in the M&A region. So as far as Indo-German investment landscape is there, it's UBC, and we also spoke earlier too, there is a strong tilt towards the inflows towards India of the German companies. So, but in the recent years, we also, as you also mentioned in your study and in your slides, that they have started seeing an increasing number of cash-rich Indian investors look towards Germany as a foothold for expansion in the European market. And I think it's also happening due to Brexit, which you also mentioned in your slide. So this background and also what you mentioned about the Mittelstand, which they say it's a backbone of the German economy. Almost 99.5% of the German companies are categorized in this segment. So, so how about this segment is not actually the potential has not been utilized, so it has still to be tapped. So, how do you see the Mittelstand playing a role in the coming years in terms of opportunities for both the inbound and outbound investments with India? Over to you.
Thank you, Seema. So the question looks into an outbound and an inbound direction. If I look on outbound from the German perspective, I may remark that many of these Mittelstand companies we mentioned came through the COVID crisis quite strongly. Yeah? They are back on a relatively high profitability and also showing a comfortable level of cash. Of course, there are distressed cases, but they are on a very low level at the moment. And surprisingly, maybe the Mittelstand is in a quite strong position. Of course, with the backup of state measures as well. But they are in that position with the profitability and with the cash on the balance. And therefore, I'm expecting that they are looking on target opportunities abroad to expand their business again. And as India remains as a very important location for various reasons, as Tanvir also mentioned earlier, I would also expect more focus on acquisitions whereby German companies, when the environment allows, to go to India and do transactions more in a common way. And if I'm referring on inbound opportunities, yes, there is a challenge, for instance, of succession and ownerships, often mentioned here. However, I would not expect a huge wave of companies coming on the market due to that means do you hear that noise also? Sorry. So I wouldn't expect so many companies just coming on the market from the Mittelstand due to a missing succession plan in the family, because the owners found their solutions over the last years, and I think they will find also in the future, for instance, based on a trust or other models. But and of course, one important reason why people are a bit reluctant, in particular these owners of Mittelstand companies, they just don't know what they should do with their money. If you sell the company, there are missing attractive investments. And as I mentioned, they are on a high profitability. The internal rate of return is quite attractive often. But the companies are coming on the market, of course, also for various reasons. Maybe there is a growth case and they need financial backup they can't get by a bank, or other reasons. So there are opportunities, but you also, I would like to add that it's a very competitive market out there at the moment. The prices are relatively high, and seller may choose for the best buyer, and at least as long as it is not in a distressed area. But if a buyer, in that case from India, is really willing to acquire a business, and if you have the inroads you need into the market for the M&A here, then you may find also attractive opportunities in the Mittelstand segment.
Thank you, Christoph. Well, I hope the participants are listening, that the German companies are waiting. So they should be contacting you that way. Thank you so much for your insights. So next question I am addressing to Tanvir. You also have a major experience in the cross-border deals. So from the experience which you have, generally what we see in all the cross-border deals, finding a partner that aligns in terms of strategy, operations, and culture is always a challenge. So the next, even when they do find a compatible fit, there are disagreements which can arise at various stages, maybe during valuation or at the due diligence stage. So in such instances, what kind of innovative structures and mechanisms can companies employ so that you have a positive deal closure, and also at the same time the risks can be mitigated? So what is in your experience worked here?
Yeah, so because of this uncertainties, right, in terms of what will be the future hold, right, there are a lot of structures which we can work around. The buyers would like to limit his downside in the event the target doesn't deliver any as per the projections, and the seller would also want a structure which allows him to tap and take a share in the potential upside if the projections are achieved. So there is an earnout model or a deferred payment mechanism also. What happens in earnout is that the investor, it allows the investor an option to pay certain portion of purchase price at a later date, being a date when a target achieves a predefined financial and operating milestones post transaction close. So financial metrics are typically in form of revenue-based multiple or profit-based multiple, and operational performance metrics could be in form of product-related developments or production-related matters. Deferred payment, what happens is your overall payment consideration is fixed, but between the buyer and seller, but certain portion is deferred till a later date. One thing to note is when foreign investor is buying shares from resident in India, only as per regulations, only 25% of transaction value is allowed to be deferred or parked in escrow for a maximum period of 18 months from the date of agreement. So sometimes the buyer may also want the joint venture to pay to the seller or the promoter. Then you can structure through paying him through commission based model or service fee based model, where you define the service agreements between the seller and the joint venture entity. There is one more area like structuring through redeemable preference shares, where you issue redeemable preference shares and some where, so if the projections are achieved or the milestones are achieved, you redeem it at premium, otherwise you can redeem it at face value. So these are basically the broad level structures which buyer could typically, buyer and seller could work out around in because of these uncertainties which are on account of COVID, right? Yeah.
Thank you very much. Now I'm directing a question to KV. I am sure in your organic and inorganic growth regiment, you have mentioned, I don't know how many transaction techniques which Tanveer now mentioned you employed, I'm sure. They did work somewhere, you must have heard of quite a few techniques which Tanveer just now mentioned. So coming to your expansions with the setup, both we say is that both India and Germany have a strong automotive ecosystem. So led by big automotive houses like yours. So we see a massive advent of e-mobility and other technologies like autonomous vehicles, lightweighting, etc. So this has created an opportunity for numerous startups to rise in this space. In other various industries such as healthcare and education, we are witnessing mergers and acquisitions between traditional players and technology-focused startups. So this trend is also now witnessed in the automotive industry. How do you see the this coming together of the large auto manufacturers and startups emerge in the coming years? Do you see any scope here? And if yes, how this is going to emerge, and what is your, let's say, future expectation in this field?
Yeah, thanks, Seema.
Yeah.
Very relevant question, because you know that India's strength has been on software development, engineering capabilities, etc. And we as an organization are investing heavily on the Indian talent. We have a tech center in Hyderabad, which houses approximately 2,000 to 2,500 engineers who work on the technology, on software development, and also things related to the advanced engineering. They are a part of the global team. So first is, we ourselves are using the Indian talent to develop the technologies of tomorrow. The second important aspect is there are good amount of startups, and that has its own advantages. Being nimble, being small, their flexibility is much higher compared to a bigger organization. So we strongly believe that partnering with small startups or taking over or acquiring certain startups always helps us to grow faster, because you have many a time you would have heard this concept of BOT, that is, we start begin with one team, and then after that you operate and then transfer. Whereas that has its own, it takes its own sweet time. Whereas what happens is we start with certain people, then train them, and after training, then by the time they are ready, we transfer them into our organization. That takes deep time. But when you have immediate requirements, then these startups who are ready, or partnerships or acquisitions, are the right organizations to be looked at, so that we are able to deliver to the customer the requirements, or we are able to develop things faster, and have also multiple numbers of, or rather to have quite some people directly recruited onto into our organization. So I strongly believe that this is a very good short-term measure for ramping up of engineers, and this is and this also helps the startups to partner. When they partner with organizations like ZF, they also have quite some things to gain, because ZF is a technology giant, and there is a good amount of learning which they can do for the organization as well as the people. So I strongly believe that the startup companies are the right things to do, and India, thanks to the engineering capabilities and the software capabilities we have, it will be a perfect incubation ground for startups, which can help the smaller companies to start slowly and grow faster. And for the bigger companies, this will help to ramp up faster rather than waiting for it taking its own sweet time to recruit people, train them, and deliver the results to the customer. So in short, in the short term, this is one of the best methodology to ramp up and meet customer requirements. You're on mute.
Thank you, KV. Thank you very much. So we are a positive projection for the future. Thank you for your inputs. So we are running short of time, and unfortunately, Mr. Neeraj Sangh, we could not wrap him, so I would be wrapping up this session here. Thank you, Suresh, Neeraj, Tanveer, and Christoph for your time on this interactive session. And I'm sure the participants go with a few value-adding takeaways and new impulses for their businesses. I wish you all the very best, and with this I hand over to the organizer, the AHK, Sumit. The floor is yours. Thank you very much, and wish you all the very best. Bye-bye from my side.
Thank you very much, Seema. I think that was excellently moderated, and many thanks to all the speakers. It's a pity that Neeraj couldn't make it, but I think, as you rightly said, he at least could very quickly reply to the question. Yeah, I think it's been a great session, and for the participants, the most important piece of information is that the study itself is very exhaustive. I mean, Nexdigm and Ebner Stolz have spent really a lot of time, so it is a very exhaustive study. And the good news is that we will share it with you over email, I think in the next hours. So you will get a mail from the office of Nexdigm. So in case you are not able to receive this mail, let's say maybe by tomorrow morning or tomorrow afternoon, please let us know, and so that we can ensure that we send the study to you. And in case you have further questions to any of the speakers, please feel free to send it in the chat box, and we will again try to revert it to you over email. Yeah, I would just go and extend my hearty thanks to Nexdigm and Christoph and Mr. Suresh. I think you really must be super busy, but thank you so much for taking out so much time. And yeah, another piece of information, India, Germany are celebrating 70 years. The Indo-German Chamber is also celebrating 65 years. So I hope you continue to support us through all our sessions and webinars. And most importantly, also our annual general meeting is coming up. So all the members will, of course, be able to join it. You will soon receive a link to join the meeting of the IGCC annual general meeting. So please stay connected. And to our friends in Germany, all the best for your voting next Sunday. And I think that's another kind of, probably we are looking at a coalition kind of partnership model. So however, what colors this new coalition will look like, I think it's anybody's guess, because I think this is really going down to the wire. And of course, here in India, the Indo-German community is also looking forward to see which will be the new government, who will be the new chancellor. And of course, we are looking forward to continued Indo-German strong cooperation, particularly in the post-COVID era, when the dynamics have changed a little bit. The companies are again looking at India with renewed interest. Indian companies are very, very aggressive about going to Europe, and we see it in our talks and our emails and the projects the Chamber is doing. So there's a fairly high bit of traction going on. So we really hope that this continues and it all goes well. I once again thank all the participants for joining, and I hope you benefited from the session. Thank you to all the speakers. Thanks to Team Nexdigm. Thanks to Team IGCC. Take care and have a good week. Bye-bye.
Thank you so much. Thanks.
Thank you. Bye.
Bye. Thank you.